Hello and welcome to MC Pro Stock of the Day. I'm Stacey Pereira and today I have for you Bharat Dynamics, a turnaround defense stock that could benefit because of the higher execution as well as margins in this current year. We could also see this really drive up its earnings. Now, let me give you a quick background on the company. It was established back in 1970s. Bharat Dynamics largely caters to India's missile program. It is one of the higher quality defense stocks which also enjoys a very high entry barrier. It has an almost 100% market share in the domestic defense missile manufacturing sector, and it has a strong balance sheet with just zero debt on its book. And if you have to look at its ROE, that is close to 20%. A look at the company's financials, and while Q4 results were impacted, it is expected to improve in the coming quarters. Now, revenue growth in the last quarter was impacted due to delays and fell by 42.2%. These delays could be attributed to change in design as well as non-availability of a certain imported components. But we could also say that the lower scale was what led to the drop in operating profits, which resulted in a 55% drop in its EBITDA. And EBITDA margins too fell by 628 basis points to 22.98% on a YOY basis. But MC Pro believes that the current fiscal will be much better, and which is why the stock could offer better opportunities. Now, the management has given a guidance to achieve revenue growth of 3,200 crore rupees in this fiscal of FY24. This is also a growth of 28.5% if you compare it to the last fiscal. It is also looking to achieve an EBITDA margin of 20 to 23% in FY24. Now, the company is sitting on a strong order book of close to 20,408 crore rupees. This is 8 times the annual revenue. In fact, it is expecting some of those delayed orders to be booked in the current fiscal. Now, some of the other factors that could work in Bharat Dynamics' favor: for one, trials for the quick reaction surface to air missile or QRSAM have been completed back in April, and trials for the NAG ATGM or anti-tank guided missiles have also been completed. The RFPs are expected soon. The company is also expecting order flows to be good, with some of those large defense programs reaching their finalization stage. It is expecting over 20,000 crore rupees worth of orders, including export orders, over the next 2 years. Let's look at the stock's valuation then. It is trading at 25 times its estimated fiscal 2025 earnings. At current price, it is offering a dividend yield of close to 1.5%. So what are the other factors you need to be watching out for? Well, one can keep a close eye on the fresh orders, as the company is expecting to get more orders in the current fiscal. Execution too is expected to be better, but any slippages could hamper growth and put further pressure on the earnings. With that, it's a wrap. Thanks so much for tuning in.